that credit. Even a dollar did get filled yesterday. So anyway, it's okay. Bear call spreads did not get filled. Iron Condor did not get filled. It's okay. I look at the levels today. VIX at 1577. Looking at my daily profit indicator, we shouldn't have a massive gap. You know, the gap stuff always can throw off 0 DT levels. I did put up an ADR, which is an average daily range, and that was fairly accurate. But it was, low to high, like 30, 35 points. There's a 34-point move. ADR was 77. So, I was just erring on the side of caution. That's all. Looking at prices today, pretty big call wall around that 68.95. This is now a little concerning that we're going to fill some gaps. This was CPI, and this is over the weekend. So for the most part, pretty inefficient price action, especially kind of bursting to the upside. Now, the market could certainly keep stretching to 69, keep stretching maybe to 7, but we are now getting further and further away from like what this market has been doing, which has been going up, pull back, up, pull back, up, pull back. So I want to play it a little, conservative on the daily profit play. We're still in positive gamma. You can see that there is one huge level of resistance here around 68.95 and maybe some attractive gettable levels around 68.40. If we do some gap filling, obviously the market's going to be red. We'd have to just turn. Right. So anyway, new day. VIX is low. This week, plenty of volatility. Earnings this week. Mostly the chunk of it that we'd be watching would be Wednesday, Thursday with Mag 7. FOMC also on Wednesday at 2 p.m. Eastern time. PCE on Friday to wrap up the week and the month. So if we have any type of, I'll show my screen in a second. Sorry. Thanks. Chat's up. Okay. Give me 30 seconds. All right. The dog coming in hot with a nice little morning gift for me. A barf. All right. Good morning, everybody. What's happening? Edward, what's happening? Keith, good morning. Sam, good morning. John, Tom, good morning. Greg, good morning. David and Jeff, Philip and Mark, Maria, good morning. Annie, good morning. Chris, Donna, good morning. All right. What's up, David? Walt, good morning. What's up, new guy? New guy that's not so new. I've seen you here for a while. You need to change that. Just need to be guy. You're no longer new to Daily Profit Plan. What's up, Rick? Okay, so let's calculate our numbers. 1577 VIX should be putting us up. I recentered this. Let's get the value. We're looking at a 77. All right. So VIX box around 1575. That should be just under 1% move. So 9.98%. We go 0.98. There's our high around 69.40. Okay. And then our low around 68.07 to crunch the numbers from the open. So if we have a minor gap, I mean, futures up about 0.26%. Looking like we are going to gap just a little bit higher again. So let's see. We'll go 6875. We'll go one. It's 0.98 from the close. Point 0.98 around 69.40. 69.40, 69.45. Potential top. Okay. And also if we're going to have a 0.2, 0.25% gap higher, that might be 5 to 10 points higher as well. Just keep that in mind. In case, if the market's going to run through these call walls today, keep in mind we could be going to like 69.50, 69.55 or so. Okay, let's go 0.98 from the close to the downside. 98 gets us a gap fill close to it at least. 68.07, 68.10, 68.05. Potential bottom. If the VIX is increasing, be careful about calling the bottom. It should still be a resilient level, but just be careful on that. If VIX jumps from 15.7 to 20, don't call the bottom right there. Okay, it's a little bit easier to call the top as long as we, that's what I'm saying. If we get a gap of 0.2, 0.25, then take the open, go up 0.98%. That's going to be like our very high probability top for the day. Okay. It wouldn't surprise me if the market is going to gap here, run into some call walls, and then start to either roll over for a gap fill today or just stay sideways again. Most of the news that's anticipated is earnings Wednesday, Thursday, and Fed on Wednesday. So even today, just kind of being in drift mode, I wouldn't anticipate a ton of direction. So I want to keep that in mind with how I kind of play today's daily profit play. Okay. All right, overnight, we did have some earnings last night. Take a look. Gold and silver continue to fall. I'm totally fine with that. So gold is now, I think we're stretching into double-digit pullbacks. So gold is it's actually 10 and a half. Not bad on little gold pullback. So I'm dollar cost averaging in. This is for Project Options Edge, CEF, PHYS, GLD, SLV, all those allocations between $1,000 and $2,000. Here is silver. Nice little pullback towards 45. I'm still not protecting my put yet, just in case this thing falls a lot lower. So we're down about 16% in silver. We're at the 50-day moving average. If this is a high to low, little consolidation perhaps, and then one more leg lower, I'm going to look at measuring this trade like a high, low, lower high, lower low. That's where I'll start looking to take profit on my long put and my call side. It's on SLV. My call side's at 51. So if I wanted to roll the call side down, I can, or I can just leave the call side at 51. And maybe that's all the protection that I really want at this time. And I've just saved myself, maybe 25 or 30% on silver. If it comes back up to those highs, we're talking 35, 40% gains, and it can still get called away at all-time highs. So with the VIX low, won't we? It's true, which is why, again, I'm good. You're going to find me just being more conservative right now. Part of the reason is, look, I'm respecting like all the day's potential moves. What I don't want to trade is I don't really want to trade like all the potential noise. So if we were to, and I talked about this in my masterclass last Friday. Today we are putting in another masterclass, daily profit play masterclass today at 2 p.m. Double up masterclass on Thursday and Friday. Like I said, I have videos out to my practical options and pinch point classes this week as well. Okay. So with this market so excited about gapping higher, gapping higher, gapping higher, there could be a surprise. We've had the VIX get crushed all the way back down to, sub 16. This makes me really happy that we took profits on that November expiration VIX. We had nearly 100% winner, which I'm pretty happy with, considering it was given back. Like all of it was given back. That trade would be worthless going into November unless we had another big flare up in volatility. So, what can happen here is at 15 plus, the market jumps up to 17 or 18 again. But I don't think we're going next necessarily, unless market's going to turn hard. We're probably not going back to 28, 29. This was a really weird window because the uncertainty in the VIX was government shutdown, US and China trade disagreements or negotiations that had to happen, just kind of spilling more drama into the markets. We had a 1 day sell off and there was a little uncertainty on top of that. But while this VIX was climbing, the S&P was climbing back as well. So, a pretty strong disconnect between the S&P and the VIX, which isn't always fun because, I use this every single day as a gauge to figure out, okay, where are my highs and lows at? I think that traders need to understand that there is upside risk, meaning this market, especially these last couple of days. I mean, it's already bad enough that we're getting no more than like a 1 day drop, and then it's like the classic taco trade we've seen all in 2025, which is something terrible hits the headlines and it's immediately pivoted on, right? So we are sitting here like celebrating all-time highs. We're telling the world that like our stock market is our economy. It's not. This represents like the haves. If you have investments, you're doing well. Um, but that's it. I mean, in the greedy side of me, it's like, yeah, this is good for a lot of people, but it's also not helping a lot of people as well. Like I always I look at both sides of this. I mean, I'm happy that we can make profits in a bull market. It's a lot easier to make money in a bull market than it is in a sideways market. It's certainly a lot easier than a bear market. Um, there's reason to be concerned that this rolls over at some point, but I'd say until the price action proves otherwise, until we have like a nasty, nasty move that takes out some recent lows, this market doesn't want to stop. Okay. Now, does it blow the top off and hit 7,000 plus by the end of the year? Maybe. Okay. Do we have some drama this week? Maybe. But now that we've cleared this October 10th sell off, is this now resistance at 67 becomes support at 67? I mean, if I'm talking bearish, it's like this market has to take out this level. I'd have to see the bears take out that trend line. I'd have to see the bears get priced back below this recent high. If they have no interest in doing that, then this is continuing to buy the dip. I don't love that the 50-day is now overstretched. I don't love that we're now certain points higher. It does make me, a little cautious, but there's my broadening pattern that doesn't seem to be holding resistance. Here's my 50-day moving average that point-wise is now 280 points. I am putting out a warning that shouldn't be the case. Last time we had 270, 280 points, we had this big sell-off here. There's 280 points away from the 50-day, and it didn't touch it, but it came down like 3+%. And then we had another stretch away move of 260, 270, pulled back. Another one here, pulled back. So just a little word of warning that we might still see the SPY QQQ hitting this 50-day moving average. Okay. So I mean, gap fills right there. Makes some sense. Is today the day? I have no idea, So I don't know. And the VIX is low enough where it's like, I'm not really wanting to, do broken wing butterflies and sells. I'm just going to be day to day position for safe levels. Let's go back to the gamma levels. We are in positive gamma. Okay. So what I would look at is, coming into an FOMC week, not much matters. Not much matters. If it's FOMC, it's like all eyes on FOMC, all eyes on Jerome Powell, and then we have Mag 7 earnings sprinkled in Wednesday and Thursday. So I think most of the volatility is going to happen like Wednesday, Thursday, Friday. When the dust settles, whatever price needs to do, and all these positions are probably predetermined by some, big institutions or market makers or whatever. But I'm curious, when the week started having such a large gap on Monday, we're probably already pushing like the market maker type move for the week, I would imagine. But we'll find out. So I'm still, like I said, I'm gonna be a little bit cautious on the day. If we wanted to get a little bit more premium, we probably want to play some of these, tighter gamma levels. The 69, 69.05. Let's look at the plus minus on the day for the brokers. Let's go SPX. Tesla looks bullish as per pinch point scanner. Okay. Do we have a pinch in? I don't know if we have a pinch point. Is it actually a go? or is it pinched like ready? There's ready, get set, and there's go. There's a big difference in how that volatility plays out. It's a go filter? What? Interesting. Um, doesn't necessarily, I mean, it's prime bullish. Yes, I could see it being bullish. I could. I mean, we already had earnings. We had a big response from that 419 low or 414 low. It's up to 450 plus. Let me take a look. Let me go. Okay, so let's jump into pinch point. Okay, 22 in the go filter. Huge volume on Tesla. Uh, I can't believe that's in the go filter. It's very rare that I see like SPY, Qs, Tesla, Mag 7 stuff in the go filter. Price has been 455. So this doesn't, I mean, it doesn't look like a go to me. That's the weird part. That's I just thought about like the earnings play. I mean, I guess it's volatile enough. Maybe this is a daily chart. So yeah, I guess I can see that. Okay. I mean, to be fair, it's coiled. Obviously I'd have been much happier playing a coil there, right? So I mean, Tesla to me in the world of embodying AI, humanoids, robo taxis, it's not just a car company. If that's what investors care about and that's the speculation on Tesla and takes this thing higher, yeah, I mean, I can see this thing moving higher. It is a volatile. I mean, it's volatile. That's for sure. We've already had earnings. Um, I mean, a bull call spread, if it's asymmetrical, if I could put a bull call spread in here, let's price it out. Curious if I went out to the end of the year, kind of a swing trade I like to do on pinch point. If I went out to December 19th, are we going to run, fairly hot on Tesla? Can we get a 1-to-1 here? I mean, if I can do again, this is not open yet, but if I did a 445 by 450 and we go up and hit all-time highs by the end of the year, I mean, I pay 243, maybe 245 to make 255. Not a bad trade at all. Set a take profit. I'll do a 50%er. So get in at 245, set a take profit at like 370, 375. High probability target hit. Price just has to stay above 450. If we hit the highs here, that's 480. We'd start creeping up to like 500 plus. Fair value. Let me see what it says on Simply Wall Street. So crazy price earnings. That's what I don't love about Tesla. Again, this doesn't mean like, oh, I should never buy Tesla. It's like I'd love to buy Tesla. Even at like $200, I'd buy it again. I have a lot of ratio spreads on Tesla that are out to the end of the year. So, this doesn't seem awesome, but I also don't think this is treating the company like it's an energy AI, treating it like it's a car company. So anyway, that's what defined risk is going to be important because in case it doesn't cooperate, um, you know, and at some point, if the market does roll over, then sure, Tesla probably takes a huge haircut. Listened to an interesting segment last night on, the comparisons between now and 1990s. um, I mean, there's concern, but nobody knows when. I mean, that's the thing is like you can be a bear and you can be bear, 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 bear. This market can keep staying this way where it's higher highs, higher highs, higher highs, minor dips, little noise, but mostly higher highs for the next what? 6 months, 12 months into the midterms next year, into the end of 2026. I have no idea. So at the very least, like just define risk. I'm just not crazy bearish. I'm cautiously bullish, and it's served me well for a lot of years. And I hate being cautiously bullish. The most bullish I've been was COVID, which seemed crazy, but it's like it just was a massive discount that I bought everything. It didn't last, lasted long enough, I guess, to make some good money. But like 2020 to the end of 2021 was a heck of a stretch and a lot of profit opportunities. But 2022 was not easy for a lot of traders when the market was 10 months in a bear market, 10 months of corrections, and down 30 to 35%. But it's hard to be like all in. I'm not all in on AI. I think if anything, there's good opportunities in the boring sectors like energy and utilities, and even some of the more like defenses and stuff like that, even aerospace. But anyway, it's just a trade. So if it looks poised, I like the fact that it's in the pinch point. Go looks good. I think if we lift animal spirits by the end of the year, I mean, if I had to pick and choose, here is Tesla. Okay. I would love a pullback into like the 415 again if I'm going to be, asking for it. But even getting like a 445 by 450 or 450 by 455, if we're going higher, that's not a bad trade. But I would set a take profit versus trying to hold that thing all the way to expiration, because we're not necessarily getting a lot of follow through. Not yet. So we need to see if price does break out. I mean, just let's be objective here. If price does break out, awesome, right? To the upside. If price fails, this inefficiency is certainly a gettable spot to the downside. So I'd obviously rather be bullish. If that's the general sense of the market, Tesla's making all-time highs again, yippee skippy. That'd be an easy trade. And also you get a upside that's going to be more than your risk. Okay. So great trust in Elon, right. But if something happens where that $1 trillion payout package doesn't work, I mean, I think it's just totally leverage. I mean, I think it'd be ridiculous if Elon Musk is like, I'm going to leave Tesla because you won't pay me $1 trillion. I think that, there's already enough like and dislike for him that I feel like that's I mean, I'm not going to blame the guy for wanting to get paid, but come on, dude. You're one of, if not the richest person in the world. $1 trillion on, future future expectations that are pretty frothy at this point. Like, I don't know. It's just a projection. You're not there yet, but still, I think I mean I've said for the last couple of years I feel like he's going to be the first trillionaire, and we're about to see it. So crazy stuff. Market cap on Tesla 1.5 trillion. So if he's going to get that $1 trillion package, it's because I think their market cap has to be closer to like 4, 5, 6 trillion. So there's just crazy amounts of growth. But I've also seen enough research that Tesla is probably going to be a great benchmark to next year. If the market's not derailed by a bubble, and I mean, that's the thing is I looked at this comparison to the 90s, even really strong companies just floundered in late 90s and early 2000s. Even the strongest companies were down 60 to 70%. Same thing that happened. I mean, Mag 7, some of the strongest companies going into 2022 were down 40, 50, 60%. So when the market turns sour, there's not really a lot of places to hide. You can park your money in bonds. You can park your money in gold. You can park it there, but options are going to be the things that save you from the drawdown pain. If you have protected positions, it'll save you from the drawdown pain, and you can basically be full of liquidity to pick up the bottoms, right? Where people get stuck is they're fully invested here with no protection. Then all of a sudden the stock is down 20%. They have no recourse other than to ride this down and then wait it out. But if you have options, you have a position here with protection and you protect that position, you might not get it all the way to the tippy, the bottom, like the bottom tick, but you can at least ride it to the lion's share and protect it, and then have a much better position to recover from. So by the time you're here, you could be at highs in your portfolio again. By the time we get back to this recovery spot, you're way ahead of the game. And that is where wealth is generated. It's from the bottoms. The biggest moves we've seen, if you bought dips in 2000, 2001, the bloodbath that happened, if you bought the great financial crisis, if you brought 2018, 20, 2022, 2025, you've obviously done pretty well. But if you're participating at these highs and fully invested at the highs, it's just a waiting game, and nobody wants to be that. So anyway, let's get to it. Daily profit play. Here we go. So we gapped up right to my gamma levels. UPS just got filled for profit. That's a pinch point trade, I believe. Was that a newsbreakers or was it a, let me check. So either newsbreakers or pinch. Pinch point filled. We got filled for, oh, baby, that's a good fill. 451. We got filled for a nice fat gap. 735 minus 451. That's a 63% winner on pinch point. Hot diggity. Okay. That makes it fun. I love it when the market gaps up and we get filled at a higher credit. Pinch point. Let me find that trade and we get some daily profit going. UPS's trade number 54 closed out for 735 credit. 735. Nice. Okay. That's a good winner. Trade number 54, UPS, out for pinch point. Project Options Edge, here's pinch point. Trade management. Trade number 54, UPS. Broker closed for 7.35 credit today. Way above our 6.31 pending order. Nice little bonus above our 50% take profit. This win is for 63% return on risk. Good stuff. Okay, nice win there on UPS. We'll take it. Good, Mark. CLS. Interesting. Got filled for $1.64. This is only a 250 credit. This thing must have had just a ridiculous earnings. Was it? This has to be newsbreakers. CLS earnings. Let's see how far I went on the trade. Wow. Okay, let's see what happens. I'm just going to set a chart alarm here, 3:15. Do we come back into it? Let's go like 3:20. Just going to spot check this one. Or I look at it like, well, we'll give it a chance because we're risking so little. I mean, I'm in the trade for $1.64. I'm only risking about 80 cents in the trade. I'm risking 85 cents, 86 cents in the trade. So if it comes back to play within like the 3:20, 3:15, which would be, a gap fill here is at 3:03. Wow, that's a big gap. Or we can just close the thing out now for a tiny little loss. Maybe. Let's find out. So this is the news. Let's see. If I can close it out for a small win, doesn't seem to be super liquid. 250 debit. Yeah, this is not. We can't close it out yet. I mean, 250 is my max loss. I'll lose $80, $85. If somehow price drops and gaps fills by the end of the week, maybe the Fed brings some interesting dynamics to this trade by the end of the week, but maybe we can turn this into a winner. So 3:15. Set a couple chart alarms. All right, we'll see. Otherwise, very, very small risk on the trade. All right. SPX 68.90. We did have a slight gap higher. I'm going to respect the VIX box here, 69. So gapping up and filling. See if the market. All right, so 40, 45. Let me see what I can get here. So 69, 40. Let me look at a. Can we maybe do something a little creative here? If I went buy, sell, buy. Nope. Broken wing butterfly offering a whopping 10 cents. No, thank you. If I do a bear call spread, maybe a little bit better. 15 and 20 is for 50 cents. Um, 55 and 50. So I can get $1 on this one if I play the 15 deltas. The VIX is low enough though. It's like this is not good, right? There's so much direction coming out of these first few minutes of the day. I'm just gonna back off for a couple minutes. It's 9:36. With the VIX being so low, the market maker move being so low. I mean, this is less than 20 points today. So 90 to 55. That's what, 25 points, 35 points. I mean, it should be safe. I don't know. I mean, the safest trade for me is using my VIX box, to be honest. I don't love the VIX is so low. Um, I don't. The market could just come back in, test the gap, and then stall here, and there's not a lot of action for a Tuesday. But I certainly don't want to get blindsided by like, oh wow, look at today's move. You know, just not feeling a lot of risk on that. So let's figure it out. So if we hit the gap, $69, 40 to 45. I'm going to go 40 to 45 here. I'll go 45 to 50 for $1. I will go. This gap fill down here is 91. That would be a push. Let's see if this is past the ADR. Way past that, actually. Um, VIX box at 6807. That's based on the center price. We should not be able to get to that low. I'll go 6805. 6805. See if I can get filled for $1. Okay, a couple pending orders for daily profit play. I'm going to hold off in the tight range. I mean, you got to be playing like a really tight, like 25 points away from center price, maybe 30 points away from center price. Not saying that we can't have that move, but ADR is up to 70. VIX is super low. I don't know. I'm calling, and it's not Monday, Wednesday, which are my favorite days to trade daily profit play. So I'm just gonna play conservative trade today. Pending orders 10, 28, 69, 45. Okay, pending orders are put in. Any major news this morning? Let me check some real time gamma levels. Maybe look at I can do maybe a butterfly if I'm looking at double ups. See if we can cast a nice little net out there. See what's sticky. If we came back down to this 68.55, that'd be a very low risk trade. $68. Let me see how wide I can go on this. 68.55. So I go up to 75. A little bit more risk. So going 20 wide, I'm risking 250 on that trade. Mm, maybe if I bump this to 50. Risking less than 200 bucks. We got to believe price is going to fall all day, though. Let's see. Or, all right, I don't know. It's a toss up. I'm looking at playing this where maybe I can have a small risk that gets me a profit trap somewhere between. Price comes in this window, I need to cover it by about 2 points. So if we're falling into like, a gap fill would be around 75. That's enough to maybe, test one level, but I need price to basically fall a lot. So if we're falling like back down towards this positive negative gamma point, that's a big drop on the day, though. That'd be 97. That'd be a 50-point drop on the day. The market's supposed to do like 20 points. Probably not the smartest trade. All right, let me flip that. Can we get to the highs again? So one really cheap way to trade this would be like a butterfly spread. Let me try this. Butterfly spread might be very cheap. And 68.50. So 45 cents. 15 wide there. That's not bad. Is the puck going to go that way? Otherwise, we play the 69.05. So I'll put a pin in that trade for right now. Not a lot of risk. Otherwise, we go 6,900. This one's going to be more expensive. I know it's going to be more expensive. But if it is 69, 69, 20 and 20, it's just 600 bucks of risk. Don't love it. So really cheap trade. Here's 45. Here is 55. If I'm going to throw a net out there, I want to catch that level. So I could do 45, 45, 75 maybe, and 15. I'm risking 360. Let's tighten this up to 20. Risking 215, but I mean, we got to fall. Risk a little bit less. Risking $1.50. It's not bad. 40 and 70 and 20. So that's less risk. I'm risking 120 on this one if we fall. I don't know. I'm just going back and forth. It's a pretty low probability win, right? I mean, the nice part is if we do fall, it pays a lot of money. But that's the trade-off is I risk very, very little on this trade. I do need price to cooperate and probably fall back down to like 50 or 55. So I think that cheaper trade, can we go like 05? Let me see if I can get anything on a bear call spread right now. If the high's in for the day. So that's right around 97. 50% at 69.05. Are we going to get back up to the top today? That's 6,900. Okay, I'm gonna go 69.05, 80 cents. Let's look at a put side here. I mean, come on, man. These put spreads are just so freaking tight. Got to go to a 10 delta, do something crazy skewed. Uh, I'm just playing around with these numbers, trying to get a dollar. This one's obviously a little tight, right? I mean, if we all of a sudden we fill the gap and then we come back up to test the highs today, that one could be tested. It should not be a losing trade based on just, okay, expect to move 20 points. Well, if we're doing an expect to move here, you can see that in real time, my expect to move is about here to about here. This should be safe. This should be safe, right? If I take the trade for a dollar, my risk is 400 bucks. See if we can pull out a partial profit. All right, let me see if I can get filled for a dollar on this trade. I'm trading at 95 cents right now, trying to put in for a pending dollar. Come on. So I did 05, 05 and 10. So that's up to the 50% ATR. Come on. All right, pending order. I'll throw this in. 69.05. Okay, a couple pending orders. Come on. All right, this is going to be an interesting play. Are we gap filling only and finding a low? Are we going to continue to wash away, another gap higher that's going to wash some of this away, be way more than the expected move today? I mean, plus or minus 20, we've already dropped 24 points, right? So you can throw I mean, for right now, it's like market makers are scrambling to figure out how they're going to kind of defend the day, or they're going to roll this risk into Wednesday, which is going to be a crazy day. So if the market stops right here, right around this gap fill, stabilizes, works its way back, that's not a huge surprise. But that would be, stable pricing up here at these highs. If the market keeps giving back some, well, we're going to get a big old direction on the day. There's probably a bottom at some point, maybe this testing level, the positive negative gamma pivot point, that 50% ATR, watching those levels. Okay, let's keep an eye on this. You see how cheap it is for a butterfly spread, 68.50. So 50. And that is a big move. We go from highs at 98 down to 50. If we get to this level, I would want to be taking profit like right away because I just think that market is going to bounce. You know, if we drop straight down for another 20 or 30 points, I think that market's going to bounce. So if you're considering like a butterfly spread down here, you know, I'm thinking about this with double ups. If I threw a butterfly spread down here, it's cheap. Mm, it's cheap. It offers decent profit. Um, is it a probability trade? Not really. Like 15 to 20% probability. Okay. Bucks luck in those reverse iron condors. We'll talk about that today in the master class at 2 p.m. Mark is definitely giving some back today. Okay. So that's why I didn't jump into a daily profit right away because we're getting quick direction right out of the gate. After, you know, two very large gaps, gap here, gap here, gap here. You know, little concerning that the market's not just going to keep slowly making all-time highs. But like I said, this is going to be important to watch this stabilize. If the, you know, market maker is going to keep things contained today for a plus minus 20, they better do some work in this area. If they let this get away and slip into, you know, testing this positive negative gamma pivot point, that's a lot of direction for the day. That's probably not going to come back unless this is a huge swing down, huge swing up. I mean, this is an FOMC. I don't know why the market would actually swing that much on a Tuesday before FOMC. Most earnings are coming out Wednesday, Thursday. So I'm curious. 95. This might be a lower risk trade. So 90. Current levels at 75. So 25, 25. Yeah, I mean, it's not the risk I really want to take right now. Or stick with that level. So if I want to get a little bit tighter, this one's not awful. I still don't like taking. I mean, this is less risk than what I usually take. This is kind of trusting the process that the market was aggressive for the first part of trading this morning, but will stabilize as kind of like the plus minus on the day. So I've got 3 pending orders in. I'm just gonna stop throwing random stuff in the air. This trade's still pending for 93 cents. Come on. How much is the 10 wide here? 75, 90, 60. Still more risk than I want. I think that put fly's got it's I've got to take a chance at it, I think. So I go down to 68.50. Now it's within the expected move. It's going to get a little bit pricier here. Now it's this, I mean, 55 cents, not bad. This could be a throwaway trade. So 95. Just got filled for a buck. And there's our, all right. So I got filled. That is the 6905, 6910. All right. So this trade's in. Filled at 9:56 a.m. Eastern time. Okay. So the Iron Condor 6905, 6910, 6830, 6825 is filled. Okay. C out of the dollar. Can I grab 70 cents? See if that'll cooperate for us. Okay, nice, Larry. Beer call spread 130 out of 60. Nice. 10 wide. Yeah. Okay, I'll keep an eye on this one. Profit target's already set. Let me get my levels in. So 05 and 30. 05 and 30. So 30 down here. Okay. So for the rest of the day, I mean, not rest of the day, but if price is going to stay inside this range, not make a fresh high, not do like crazy amounts of damage to the downside, this should be a pretty good looking trade. So, I mean, I'm going after 70 cents. I am going to just set it up for a 50% winner. Try to go after a little winner at 50%. 70 would be safe. 75 is totally fine. I'm going to let this kind of marinate and see if we pick the right levels where we're going to be rewarded for this. So I'm going to go after a dollar credit, taking 50 cents debit to close it, and see if this cooperates. So 73. I mean, plus or minus 20 on the day, lows at 73. I'm hoping that's safe within our trade. All right, so keep an eye on that one. I'll set a chart alarm up here at 6905. That might annoy me if we hit it, but I took the trade. Okay, so 40. So I'm going to put my chart alarms here at my call side and my put side. If they don't trigger for the next 30 to 60 minutes, we should be looking good for profit on this trade. All right, what do we got going on here? Buck, how you doing on that reverse iron condor? Larry's got the bear call spread in and out for profit. This is looking pretty good. I did a pretty decent skewed iron condor where I was much closer to the call side Went a little bit further down on the put side. Obviously, you can see like my center here. Like if price drops a little bit lower, our trade actually gets paid faster. Okay, so when we're like kind of exactly at center of this price, we're going to get enough wiggle room out of this one to extract some of that quick profit. And this one, because we're out of the money enough, it shouldn't really be hurting us that badly. So we'll see where price just kind of like sits and settles. Maybe it hangs in there for just kind of stalling around the gap fill. Hopefully, we're not just popping right back up to all-time highs again. We'll see. Right now, trading for about 85 cents. So I'll keep an eye on this. Okay, let me check something here. Okay. All right. How are we doing? $50. Yeah, I was gonna say buck going after $50. That's a lot different. Yeah, 50% would be tough because I'm like, if you want to wait later in the day, you can hit your 50%. But yeah, I see what you're saying. What'd you get filled for on that one, by the way? 630 credit. How big is the dead zone? 90 to 10. Well, that's not bad. 20-point dead zone. I mean, that's a good fill. You're risking 370 to make buck 30. So going after $50, yeah, that's gettable. Seems gettable. Okay, good stuff. All right, we'll keep an eye on that one for the morning. Two levels I'm kind of watching for the day. If this gap level kind of holds and stabilizes, I could see price trying to get back here for the day. If we're gonna kind of let things loose a little bit, I could see us coming back to this positive negative gamma. But I'm not going to force the trade. I like the trade that we're in. I'm going to try to grab 30 cents, 40 cents, 50 cents out of that dollar credit from the iron counter that I'm in for daily profit play. From here, I'll just kind of assess. Because earnings tomorrow, FOMC tomorrow. I think most of the volatility. I mean, even yesterday was a quiet day. You kind of had that like sneaky little move in the afternoon, but plus or minus was only 30 points on the day, and that was with a pretty one-sided direction move at the very end of the day. But point is, it wouldn't surprise me if we just have like a chop fest for the day, not necessarily like screaming higher, but not falling off a cliff either. And then we have levels. So let me check something really quickly here. Let me check on the higher time frames. I'm curious, like going out to the next week or so. Then you look at something for SPX. Let's go out to next week. So what's interesting is this option chain that I'm about to look at here. So going out to Friday takes into consideration all the earnings this week across the board, takes into consideration FOMC and PCE this week by end of month. So this has an 83 plus or minus. Okay. I am curious on just a standard option chain here on the call side, 69.80 by 85. That's going to be tough to get filled for 250, but I don't mind taking the trade. If I want to do let me see something here. If I did a 75, 80, 90, like that's pretty low risk for a broken wing. If this gets filled for $1, I wouldn't mind taking this trade. I mean, that's after a pretty good run up. I don't know if it's going to get filled, but max risk 445. Take that down to $400 with a profit trap. That's not a bad trade. It's trading for 50 cents right now. I don't like it at 50. I want to take it for $1, so it reduces my risk. The other option would be if I want to risk less, I do a 15 delta, and that's either the 75 or the 80. So 80 by 85 for 250. So it's going to be easier to get filled on a broken wing butterfly push if price goes higher. If I wanted to set the broken wing up at a 16, 14, 12, I'm just looking at the deltas here. So if I wanted to risk less on this trade, $2 would be tough to come by. This is by Friday. So a lot of stuff has to happen. We go a little bit further. 31st, what's the final Friday? First week in November is the 7th. November 7th, that should be. I mean, are we coming back online? Is the government back online at that point? Do we have non-farm payroll yet? Okay, I'm going to take this one instead. I'm going to do 20, 25, 35. Can this get filled at a... Let me see if this is trading at the money. If this comes at the money, so buy, sell, buy. So you get a comparison here. Yep. So if this comes at the money, I can get filled for 250. I'm going to take this trade. So two. All right. So I'm going to put this in for 250. The risk would be 250 to make 250. I also have a $5 profit trap. Not a bad trade. I'm going to throw this one in. This is a little bonus trade. I'll throw it in pending order. Here it is. SPX. I'm just going to put a bonus trade in the chat for everybody. SPX 11/7 expiration. Buy the 70/35. Nope, 70/20. Sell the 70/25. And the 70/35. 250 credit pending. Okay, pending order if you want it. On the flip side of that, so this is all this week into next week. 15 delta. Let me see where that 200 or that 50-day moving average is sitting. 66. What's that delta? 66. It's way down there, man. 66.20. 30, 25, 15, 250. All right, another bonus trade. SPX 11/7 expiration. Buy the 66.30 put. Sell the 66.25 put. And buy the 66.15 put for 250 credit. Pending. All right, let me explain those trades. Okay, I will show you. I'm just going to build it out visually so we can see it. So build out a call butterfly, SPX out to the 7th. And let me find my strikes. When you fill one, cancel the other. I mean, you can. They can both be pending. But yeah, if one gets filled, then obviously the other one's unlikely to get filled. So let me build this one out really quickly. So 70/20 will be my first buy call. So 70/20. And then I sell the 25. And then buy the 35. So there's my broken wing right there. Okay, there's my broken wing on the call side. If I add in the buy put, and sell put, my sell put would be, so 66.30 is my buy put. It's way down here. 66.30. And my sell at 25. This is going to be with 2 contracts. And the 15. Yep. Okay. All right. That's my trade. So right now, these 2 trades combined are offering about 95 cents a credit. Now, I could take that trade, but if I take the trade for 95 cents, obviously I want price to stay in the middle, and that's how I'm going to get paid. What I'm doing is, if price is going to come up, and you can see here, like this is the skew in the market. Okay, right now the pricing skew is so extreme that we're getting a lot more distance on the put side. I'm going way further away on the put side. Similar to what we're seeing right now in daily profit play is you have the expected move in your broker platform. Okay, if I sell calls at a 15 delta, it's right here. If I sell puts, it's way down here. There's a lot more distance away from the strikes. So there's clearly some pricing skew in the market right now, which is okay. It's just I don't love it when it's really obvious and we're going like several more strikes away. Anyway, point is, if this trade gets filled, this would be, price would have to go up to, maybe test the call side and we get filled 250 on this trade. Okay, look, I'm looking for a price to get filled at 250 to risk 250. Okay, and I also have a $5 profit trap. So maximum profit would be 750 for a max risk of 250. Same thing down here. If price were to fall all the way back down to the 50 period moving average, which I still think gets hit at some point in the near future. So I get filled here, 250 credit, max risk of 250. Okay. And if we stay in this profit trap, then we get paid $5 for a 750 winner. So my risk is at least fair, where I'm not risking a ridiculous amount. If I lose 250, okay, fine. But I can make 250 or I can make 750. Okay. It's not a Batman trade. Technically, a Batman trade is ratio spreads. This is a little different. But this isn't filled yet. So, I mean, if it gets filled, I want to get filled for 250 credit. So that way I can tighten this up. This would increase our, it'd be up here. So our middle would be like 250. So we'd have this green zone. This green zone would be up here. And this would be all green. So we have a little bit more profit potential in the middle. We have our profit traps and then our risk. Okay, so this risk would actually be reduced. I'm going to go, see if I can go dark blue. So this risk could be reduced to about 250. There. So this trade, if it gets filled, 1 second. About to sneeze. We reduce the risk. We pull in a little more credit up front, and we have a profit trap. So what am I doing? I'm going out to November 7th. I'm taking into account all the earnings this week, and PCE and Fed and non-farm payroll. If we come back online next week with the government, loading back up, and the fact that we have the 50-day moving average is right down here near the bottom of this trade. So if we test this, here's what I'm looking for. If one of these tests at the money, we should be able to get filled on the trade. That's what I'm hopeful for. So if we test the 7,000 plus handle, do we get this trade filled, for 250 credit, and then we fall off of that? So maybe we, test 7,000, fall below it. We hit the 50-day moving average. It's 66.14 right now, 66.15. I'm putting in a trade around 66.20, 25. So if we test it at the money and we bounce off that level, we get filled where we want. We have a profit trap. We have defined risk. I'll do good to cancel. These are only out till next Friday, so they're not sitting out there super long. Okay, but mechanically, I'm looking at like those are, this call side is a 15 delta. The put side is a little bit lower, like a 9 delta, because I want to go down to that 50-day moving average. Okay, so these are both broke wing butterflies. It's just a bonus trade. I'm technically not going to put this out for any service. I'm just going to do it here for daily profit plan. Okay. Because they're not filled. They might not be filled. Usually my broken wing butterflies are rarely filled at 250. But I want to throw in that profit trap. I'll see if one of these tests at the money. If they do, this could be a good trade. So, I mean, if we get this trade filled and it's a winner or a loser, it's all part of like this live session. So I will track it. But I was going to say, like, it's not really a service trade because it's a bonus trade. I mean, I'm kind of making up on the spot. Why would I go out to next Friday? I'm just, after having 3 gaps and 3 melt ups, I'm, mechanically looking out to see, okay, this is a massive week of news. If the options market and the efficiencies are actually priced in, then maybe the market cares about some of these current levels that we're seeing. Cares about the 15 delta, cares about the 20 deltas, cares about the 10 deltas. We shouldn't see prices going through those levels. I'm getting a debit of 510. David, that's probably not in the right way then, because right now, let me look at the trade. Right now, they should be showing like 70 cents credit on one trade and 25 cents credit on the other trade. Remember, make sure that if you're going to do that trade, you just double check all your levels. This is I'll type this up again. So I've got the call side. So I'll put the call side here. So this is a broken wing call fly. Is 11/7 expiration. This is on SPX. Buy the 70/20 call with one contract. This is where I think you might be having to double check your options, David. So buy the 70/20 call with one contract, sell the 70/25 call with 2 contracts, and then buy the 70/35 call with 1 contract. I'm looking to get 250 credit. Right now, this is showing like 70 cents credit. Okay. Over here, this is a broken wing put fly. SPX 11/7 expiration. Buy the 6630 put with 1 contract. Sell the 6625 put, 2 contracts. Buy the 6615 put with 1 contract. 250 credit. Right now, this is showing about 10 cents credit. So they shouldn't be showing debits. They're showing some small credits, and I'm looking at these to be pending to fill at the credit that I want. That makes sense? Okay, 6620. Yeah, so that you're doing the equidistant. This is broken wing, so you got to separate those strikes. Let's see here. Sean says leave open fill until just close daily profit play for 70 cents. Fantastic. Good. Did an iron butterfly 80, 88, 68, 85 pin, 20 wide, 13 out at 12.75. Nice Vivek. Nice trade, man. Okay, let's take a look at our daily profit play. Daily profit play today, up about $30. That's a 70-cent fill. Okay. So look, if I'm greedy, let me try this trade here. 70 cents is a good, I mean, mechanically, just get out at 30%. That's pretty solid. I'm going to try to get out of here for, try 65 cents. So far looking pretty good. Let's see if I get 65 cents. I need a little bit more time to get that extra 5 cents. If I go 70 cents, that's totally respectable. Let's take the winner. Okay. Not feeling at 70. So I'm going to wait this thing out a little bit longer. I'll go 50 and then come back and check on it. Okay. I'll keep an eye on this. All right. Any questions on this little bonus stuff? So, why am I taking the trade? There's a lot of news that if the market is efficient, that a lot of stuff should be getting priced in by the option market makers. So that's upside and downside. I'm going a little bit further on the downside because I see the technicals of that 50-day moving average. On the upside, we've had three really good pushes from last Friday to Monday to today, gap, gap, gap. So I'm not saying that we can't stretch to 7,000 plus, but that's also like a pretty awesome, like 20+% for the year target that the market might just stall at. And to get there, we might need like another surge. I'm just curious, like, what else? I mean, like right now, the market's already pricing in like optimism out of US China. I mean, the APEC meeting is going to be when? Like, it's an APCE, the APEC summit. It's in South Korea. I think it's the end of this month, or I think it's early November. So is the market, does the still have, the market have like one more push of like, they finally did it? It's like everything that's going to happen with US and China is going to remain dynamic. There's no way that there's any type of terms that are like permanent. It's going to be like a month to month thing or quarter by quarter thing. And it's going to be like living, breathing, dynamic. This noise of US China is going to continue to happen. You know, I mean, there's arguments that China has the cards, that we have the cards, that our build out are what I don't know. Um, I think I keep going back to what I've said for years now, which is on the optics side, it looks like, you know, we're trying to destroy China. They're trying to destroy us. But I think at the end of the day, they need us to buy stuff. We need them to make stuff. We need them to export stuff. And then we're trying to build an advantage on our, it's just like, it's an immovable object and an unstoppable force. If we're trying to destroy each other, I guess we can take everyone down with us, but it's like if we just found a way to work together, which I don't think is going to happen right now, but if we found a way to work together, I feel like the whole world would be better off and probably more prosperous. But it's not the agenda. That's not the policy that's happening right now. Nevertheless, the market priced in Monday because of US China optimism. There's still the APEC summit coming ahead. Maybe there's another surge on that. But if we get through earnings kind of unscathed this week and FOMC doesn't do anything majorly disruptive, I mean, the market just kind of continues this like slow grind. If it's going to have like a, you know, pop and squeeze and push and capitulation move to the upside, so be it. If I'm going to get dinged on this trade for a loss, at least the loss is small. So I'm not risking more than what I can make in the trade, which is why I'm taking this trade. I'm willing to take a 1-to-1 here. Okay. I'm willing to take a 1-to-1. All right. What else we have here? What's Thursday? APEC. When is the? I'll look. APEC summit in South Korea. It says October 31st to November 1st. So I mean, throw that stuff into the rest of this week, right? High stakes diplomacy, APEC summit. Plus you have FOMC. Plus you have core PCE. Plus you have all the Mag 7 earnings this week. So yeah, I'm going to go out an extra week. Let this week be whatever it is, good, bad, indifferent, noisy. I was having a conversation yesterday. Look, I think that market makers are better at their job when there's a lot of this stuff getting thrown in there. I think they're better at their job when there's more volatility, more craziness. It's like it almost forces their hand to be more efficient because all this crazy stuff can happen. So I don't know. That's just my thoughts. Market makers have been doing this stuff for over 50 years. I'm not trying to tell them how to do their job. So I'm trusting the process. I'm going out mechanically. What I'm doing is I'm siding this setup where the risk is no bigger than what I'm willing to make in profit. Okay. All right. All right. So that's happening this week as well as everything else. Okay, a little bit more time on the daily profit play. It's still up about 30%. Look, you're not going to hurt my feelings if you want to take profit. If you're up 30%, I've always said this for daily profit play. If you're up 20, 25, 30%, smart, safe thing to do is take profit at 30%. You know, 20, 25, 30%, take profit. Okay, what else? Waterfall. We had a class yesterday. I mean, we've got a lot of trades running for profit. We finally had some nice winners yesterday. We closed out SPY, QQQ for profit yesterday in Waterfall Income. We have a Project Options Edge trade that should be closing out on silver. This trade will be closing out today for $200. So silver futures for Project Options Edge, that'll be another winner. That adds to like a 94, 95% win rate for Project Options Edge. I don't have to do anything, even with silver, by the way, being down like 15, 16%. We're still walking away with a $200 profit on this trade. Yeah, good. I mean, we started dabbling in silver futures. I'm trying to think. It would have been, trade's been open for 85 days. It was a swing trade well before we had like the crazy big rips on silver. So anyway, looks good. Happy to have some profit there. That is QQQ, SPY, and SI. So 4 winners this week. Plus, we have a winner in Newsbreakers. That was a great win for UPS and Pinch. Or is that Newsbreakers or Pinch Point for UPS? I want to double check that. But that was a nice, yeah, Pinch Point. Awesome. So another win for UPS Pinch Point. And the fact is that we got a huge gap higher on UPS. That also means that some of my option trades that I have in Project Options Edge are looking good. Here is this was up 74% now. So we've gotten through earnings, I believe. We had a 85 by 75 ratio spread plus the 70 put. And looking at the price here, I mean, maybe it's a short squeeze. Maybe they mentioned the word AI. Maybe they're partnering with OpenAI. Maybe they're partnering with NVIDIA. I have no idea. But that's a big move, probably way above the expected move. I mean, obviously it's fading a little bit, but we had a rip up of about 13% on UPS. All I'm saying is I just hope that the lows are safe. If this is enough movement to get the lows profitable, I guess I don't mind taking some of this profit here. You know, I'm up 74%. I can make an extra $60 on the trade. This has now increased my probability of profit by 96%. So, I mean, I don't think I'm going to lose on the trade. If I do, I've got a $5 profit drop here plus a naked put. I don't think we're coming back to 75. Let me check the option chain. This is a January expiration, 75. I mean, it'd be a 7 delta. So, I mean, chance of assignment, like 7%. Chance of profit, probably 95, 96%. So anyway, good stuff. All right, we good? All right, you want to do a little top down? What's going on with our heat map? Heat map today, most stocks are declining. Microsoft is up, NVIDIA is up, Broadcom is up, Tesla is up. A lot of red across the board. 65% of the market is down. Yikes. But it hasn't done enough to really derail the S&P from these all-time highs. Not yet, right? Yeah, I mean, I'm just being cautious. If we're stalling, after another little like pop to the upside for these 3-4 candles in a row, I mean, let me ask a question, everybody. Would you be surprised if this market is going to come back and see this October 10th level right here? Let me change this to black. Would anybody be surprised if prices fall back down to that level right there? Nobody be surprised, okay? Would anybody be surprised if the market decides that it's going to roll over a little bit and come back and find the 50-day moving average? Would anybody be surprised? No. Okay. So let's see what happens. Because if we keep at this pace going up, look, my butterfly that I just put on for next Friday is all the way up here. Can it get hit? Maybe. Okay. But if we have a gap fill, if we have the midpoint of this October 10th sell-off, if we have the 50-day moving average, I'm just positioning for a little opportunity here, good fill, 1-to-1 risk reward, possibly a profit trap if we're lucky, but that's not really the plan. Let's see what happens. Part of that trade might also be there is no fill. We might just not get filled, and that's okay. I'll accept that. right? But if I'm looking here and saying, would anybody be surprised? And you're like, no, 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 no. I'm not either. I wouldn't be surprised if the market finds a correction. But what is our catalyst? I have no idea. Like this market shrugs off everything bad. We have one nasty trade war and then it pivots the other way. Do we leave the APEC summit this week where China's, does Trump walk out of the room? I have no idea. I think it is in the U.S. best interest to play nice with China. And I think that it's in China's best interest to play nice with the U.S. because this tit for tat is going to end up ruining the world because we'll go to war. If ultimately we don't get what we want, we will go to war. And if China doesn't get what they want, they'll probably be willing to stand their ground and fight back too. And it's like, it's 2025. We're all on the same planet. And how easy it is to feel like we just want to destroy each other. But I think we need them. They need us. It's optics over reality, in my opinion. But it's not fun because it's super, super noisy. And it can be really disruptive. So all that stuff is priced into the efficiencies of the option market. And I am, siding with the options market and the market makers being in the efficiency side. Okay. All right. Good stuff. So a couple things. Let me go back to, I've got the pinch point scanner up. I want to take a quick peek of that. Daily profit play today. I've got a masterclass today. So daily profit play, DPP, 2 p.m. Eastern time, masterclass. Waterfall income, we had a live trade session yesterday. We had 3. This had 3 winners closed, which is good. All the other ones are sitting at like 96, 97, 98% chance of profit, 99.5% chance of profit. They're not at my full credit levels yet. There's debits I could put in to take like 88 to 90, 92% of the profit, but we have another like 8, 9 open positions, which I'm okay with. We took a new trade yesterday. Newsbreakers, we had a lot of trades placed last week. We'll watch those. Double ups. I'm looking for a couple of like nets to cast this week. See if I can find it. Maybe tomorrow with FOMC. The market's going to be pretty volatile. I would think like Wednesday, Thursday, Friday, up, down, sideways. I'll figure it out. If I find a good level, I'll take it. Pinch point. UPS closed for a 62% winner. Crash insurance, we closed out. VIX, that was the November VIX for profit. Project options edge. Looking at silver for profit. I might look at also closing out the UPS trade. So it's a UPS ratio spread. If I close that one out sooner than later, maybe a bit by the end of the week. But I want to take like 75 to 80% of that max profit. But silver for sure, it expires today. I will be doing videos. So 2 p.m. masterclass on daily profit play. I'll be doing videos for pinch point and videos for project options edge this week. I'm doing a masterclass on double ups. Double up 2 p.m. masterclass Thursday. This one's today. Okay. Any questions on this stuff? I know there's a lot going on. Okay. Is everyone good for this week? Classes, master classes, sessions, trades. Come join me every single day. There's a lot going on. I mean, there's a lot for the market to be digesting day in, day out, and it's fine. We'll figure it out. Okay. I'm probably going to be pseudo conservative on daily profit play just because it's a huge question mark of how much volatility and stuff we have. We are sitting at a fairly low VIX. Okay. So I don't love the fact that we're like a, 16 VIX. We were up to 29. I just think that all it takes is, one silly day and all of a sudden the VIX jumps up to like 18 to 20 again. And then we're right back into this big uncertainty window. Okay. All right. So daily profit play today, 2 p.m. for a masterclass. We did a masterclass on Friday. We talked about the core strategy. I wanted to spend a little bit more time kind of talking about the directional trades today. So like the reverse iron condor is kind of the simple core strategy we do. I only trade that maybe once or twice a week, but it's also a pretty easy one to put in, define the risk and manage the trade. All right. So that'll be today at 2 p.m. I do have something I'm working on in the background. I had several meetings over this last couple of weeks. I might spend some more time using. So Kane and I did the GAM report yesterday. He showcased his Gex trading terminal. He was kind enough to give me access to that. I've been watching this thing being built for months. And what's funny is, this software that I've subscribed to for years, I mean, I do this because I have real time data and I have real time index data. This stuff costs like SPX alone costs like $20,000 a year to have that feed. VIX costs like $20,000 a year to have that feed. So, I mean, I used to have a subscribe to Bloomberg for 20K a year. That was ridiculous. But anyway, now that it's my dime, I don't mind subscribing to stuff like this. This is my visual roadmap. This helps me trade every single day. Kane's terminal is pretty stellar. So, I'm going to try to get like an official like affiliate link, and I can share that if you're interested. Maybe I can hook everyone up with a discount. But I think it's pretty sweet to have some trade ideas generated based on, these levels get hit. These are magnets for price. Either price goes to them or price respects them. And they provide, directional flows as well as resistance and support in the market. I think that's, futures and options are the drivers of price. So anyway, we had fun with that yesterday. I'm working on something that some of you might be interested in. I'm not sure what the timeline is going to be here. It might be late November. It might be December. We'll talk more through it as I get kind of some beta versions of my dashboard that I'm building. But what I'm looking for is something to help us with income on the weekly side and the monthly side. And it's similar to kind of what I did, today with that bonus trade. I'm not going to do all butterfly spreads. I'll figure out exactly how I want to pinpoint the strategy. But I truly believe in the efficiencies of the market. I really do. It's market makers' job, and I think they're better at their job when there's major news in the headlines that they have to price in. So, looking at weekly income, looking at monthly income, also setting the parameters where we're never taking more risk than reward unless we have a crazy high probability. I think the best thing is let's just set these trades up for like 1-to-1 or better. So anyway, we'll share some more details on it. I've had probably 8 hours of meetings the last 2 weeks on this stuff, getting the logic out there, building the guts of this dashboard like I want. And we'll talk about it a lot more in the next probably 30 to 45 days. Okay. Can you post a link for crash insurance service? Yes. I think it's on prosperitypub.com/crash. I think that is the link. Deanna, do we have the direct link for crash insurance?
I can go grab it in a minute or two.
Okay. Because all I had was this one. I didn't know this is a webinar registration. But if we actually have the direct link for the checkout page, can we post that in the chat? Okay, we'll get that posted. I think this is interesting. If we did flash here, reserve your spot. I'm curious when that gets you into a webinar. Anyway, we'll find the pay link. I don't think it's on my website. I don't think this is one that is. So if I go chrispulvertrading.com, I don't think that crash insurance is in my little banner here. Double ups, daily profit play, newsbreakers, pinch point, waterfall. Okay, so crash insurance is not on here. I do know that crash insurance is, I think we're still offering it for like $97 or $197. It's one of those two. I think it's $197. I'm not sure. But
it looks like, sorry not to interrupt, it looks like we just have it for telesales only right now. But if you guys just call in, tell them you want it, they will honor that price. I'm just dropping that phone number.
Okay. What is the price? Was it $197?
Yeah, it's $197.
$197. Okay. $197. And what's funny is that's about the risk that I always take on my crash insurance. Like we got into the fixed trade. It was, a $250, $280 debit, and it paid us, almost 100%. If I do $250 to $500 risk, a lot of my trades that I put in for crash insurance could pay out literally thousands of dollars, like $5,000 to $10,000, $20,000. Those trades are great. Like I was thinking about this in 2026. I'm like, look, I don't know what's going to happen in 2026. Neither do you. But I will say that if this market does something ridiculous, like, oh my gosh, it truly is a bubble, and off we go, we come back down to this level here, it's going to feel awful and painful. Look, if we're up to this level and I put a hedge out here for crash insurance and this thing costs us, let's say, $250. Well, that $250 could pay us up to $5,000 or up to $10,000. You're happy you have a trade like that. And if it doesn't fill, then prices are probably going to be sideways, maybe higher, and there's not really a lot of pain in the portfolio. Okay? But if I could risk $250 and make $5,000 or $10,000, that helps me offset some of the pain that would come with, my exposure, my open positions, the option volatility, and, have something to at least help me mitigate and wash a lot of that risk. So anyway, I'm saying, like, that's why crash insurance is important. I know that I can't, call every top and call every bottom, but when I'm cautious, I've got to have some protection. So anyway, it's a very cost effective way to do it. Yep. So Larry's asking about it. We'll get the link in, or get what's the call. I do these webinars every single day.
Mhm, you're good.
904-706-3537. Is that right?
Yep, you're correct. You got an A+. I'm so proud of you.
I've only said it like 1,000 times in the last like 6 months. So, all right. Anyway, you can do support at Prosperity Pub, prosperitypub.com, or call us 904-706-3537. Okay. I just put that in the chat. So if you want to just inquire, the team knows anything you need. If you want to talk about any of these services, you can email us, and I might as well put it here so I have it as a reference. Phone 904-706-3537. Boom. Now I don't have to pull that from memory. Okay. Good stuff. All right. Let's check and see how Daily Profit is doing. Deanna, how are we doing on your side?
Whenever you're ready.
Okay. Let me do this. So I'm looking at a 40% winner on Daily Profit Play today. I think I'm going to take it. See if this will fill for 55 or 60 cents. You sneaky dog. All right. 60 cents not filling. I'm going back to 50. If you're taking profit already, good work. I'm going to keep an eye on this one for the next little bit. We're coming back closer to center. Okay, we're coming back closer to our center price here, which is what I want. If we come back down to this low, this is fine. Everything today should be looking good for Daily Profit Late. I don't think we're going to rip up the fresh highs. We just kind of fumble around this area, and I'll set it at 60. I don't want to be your greedy. I think that's silly. Let me go 60 cents and let this thing fill. So I'll go 60 cents. If it gets out, that's a 40% winner on Daily Profit Play. I'll certainly take that win. Okay. Deanna is going to queue up a double up session. I want to share this, everybody. We have a masterclass on double up alerts on Thursday, which is a perfect time to do it because, if I see some trades, I'll issue the trades, today or tomorrow if I find them. But on the masterclass, we're going to do it at 2 p.m. Eastern time. What I always like to do during the week for double ups is I look to see, do I have something on the indexes like SPY, QQQ? Do I have something on SPX? Do I have something in the Mag 7s? We have earnings on Wednesday, Thursday, Friday's expiration. Okay. So it's a perfect time to review everything for double ups. The focus of double up, as Deanna pushes the go button on this, or push the play button, this strategy, and I actually talked to somebody yesterday that's like one of Lance's right-hand man. And I talked to Rodney, and he has been following me, and Rodney's helped me out with some of my copy and stuff for my franchise. He absolutely loves double up alerts because he's like, I'm only risking $50 to make like $900. Like, that's a no-brainer trade. I know. That's why I take these trades. Okay. I never feel bad about losing $50 or $100 in double ups because my winners are much bigger. As we go along, some of the winners we've taken just in the last few weeks, 190% winner, 220% winner, 130% winner, 150% winner, 180% winner. Those winners are way bigger, and they can be way bigger than that. We had a winner that was up to, I tracked this in Telegram. We posted it officially for double ups. The trade was offering about a 400% winner. We had a trade that was in for $1.05 that was showing up to 590 credit. Okay. That was a 460% winner if you just managed the trade. I got out early with 190%. If you watched it for another couple of hours, it was offering over 400% return on risk. So if you've ever wondered what it's like to not take a lot of risk and only manage big winners, double up service might be a lot of fun. And we got a masterclass on it on Thursday. Okay. So that being said, let's turn this thing loose, and I hope to see you all on Thursday for masterclass. Today's Daily Profit Play class at 2 p.m. Double ups on Thursday. Videos coming on Pinch Point and Project Options Edge. Busy week. And I'll be here all week. Be sure to tip your waitress. All right, just kidding. Bye. We get the most bang for our buck. That's how we can set up a 7-to-1 reward to risk, 10-to-1 reward to risk all in one day. It's not perfect. And I've said this from day one.
this strategy is one that, because a lot of times I will trade it this way. If this is live price, I will put a trap up here and a trap down here. And as long as the combination can win me profit on the day, I'm essentially going to have like a 50% win rate here, but I walk away profitable almost every time. So a lot of times I'm willing to not just pick one direction, but I'm going to say, look, I'll trade the market both ways. I'll cast a net on the upside and downside. As long as I can walk away with a net winner, I'm making money. So if on this one I win 150% and this one I lose 100%, I'm still making 50+% on my total risk on that trade. Okay. So the reason I'm saying that is because my win percentage is not awesome. It's 58%, which is the lowest of all of my services at 85% pinch point, 90+% in waterfall income, 90+% pinch point, or 85% pinch point, 90+% project options edge, 90% daily profit play. Right. I knew that double ups would be a lower win percentage, but the way I structure the trades, I mean, even if I was 50% winners, our winners are much bigger than our losers. Okay. Just want to make sure you understand that. All right. So this is a nice little breakthrough to change the way you see stocks. I think it's a way to look at uncovering some of the biggest bets we see in Wall Street every single day. And most importantly to me, the way that I build these trades out has the power to double our profits, hopefully more, not just in a year, not in a month, but in just a couple of days. Okay. So I'm talking about like triple digit winners within like same day or, 1 or 2 days. Here's one in Apple. I just showed that as an example. iPhone sales. I mean, Apple's up to all-time highs because apparently iPhone 17 demand is pretty high. But at this time when the 16 came out, it was a little lackluster. What'd they do? Oh, they improved the battery. Oh, they improved the camera. The same stuff they've been doing for 20 years. Okay. The stock was taking a world-class beating. A lot of investors see it as a red flag. But my system, I just showed you this. If Apple's looking to surge, and we've got underlying trading at 200 with a big fat gamma level at 223, we can set up a trade, go for a high reward, low risk trade, and take the trade in. The max you can lose is what we paid for it, and it has upwards of 500% gain or 1,000% gain on some of these trades. And sure enough, we see a big rip on Apple, allowing us to capture triple digit winner the next day, 127%, which means $1,000 into that paid out. What's that? More than doubled, and 2,500 turned into 3,175 profit. So daily doubles, daily profit play, or I'm sorry, double up alerts. These aren't things that you see online. Everything right now is, I mean, who listens to the media and actually feels like this is something I should follow? Who's trading the news? Did anyone see that there are 2 tickers out there right now to follow Democrats and Republicans? There is Nancy to follow Democrats, and there is Cruz to follow Republicans. And I don't know if this is like constantly tracking like the politician insider purchases, but anyway, it's just, I think it's funny. Like mainstream media is creating just so much noise. And I'm sure what most people experience is whatever you want to have fed to you, they will feed it to you. So it's going to basically reaffirm your echo chamber if you watch the news. I don't like the news at all. I think it's so much noise. And honestly, it's what's basically going to build the tops and bottoms into a lot of the trades. It'll scare you into getting out of positions when it's the time to buy, and it will, influence you to chase positions when they're at the highs. So I stick to the data. I stick to good mechanics. This is why I like options so much. But I've got cutting edge technology that a lot of people don't know exists. I use this stuff every single day. Allows me to spot some of Wall Street's biggest undercover bets. And usually these are hitting these prices like a magnet within a couple of days. Okay, here's one on Tesla. If you weren't trading Tesla, right now we got some pretty big news on Tesla. Elon Musk, if he's not going to get his $1 trillion package approved, he might leave Tesla, which I think would be insane. I feel like that's completely a power play move and leverage. But it's likely going to come down to like the final hour and make this executive decision. But it's just crazy stuff. So, is he holding Tesla hostage with a crazy pay package? Maybe. Is that volatility in Tesla? Maybe. I don't know. But anyway, after the election, the stock was ripping higher and it fell like a rock. We saw that happen this year. If it couldn't any worse, Elon Musk has been, as he dabbled in Doge and politics, it just got way worse for the stock. But it didn't matter. Okay. None of that stuff matters. It's all noise, because what we have here is a massive undercover bet that we'd like to see the price surge in coming days. Is anybody going to tell you about this? No. So Wall Street Journal, not going to have it. Financial Advisor, certainly not going to have it. It's not in your charts either. This is in my software. Do I have a level that I can go after? Is there a magnet that I could see Tesla get to? And if so, place a trade, triple digit winner. Okay. So I'm looking at a lot of these trades. Is a lot of the winners are over a 100%. So I'm looking for my double up alerts is all about taking trades that can offer us triple digit winners. So 177% gain in Tesla overnight is pretty sweet, but that's tip of the iceberg when it comes to today's opportunities because I'm looking at these primarily focused on Mag 7 and index. So I trade SPX, SPY, QQQ, and Mag 7s throughout the week with my double up service. And I'm looking to double these trades in the same day or within usually 1 day or so, 1 to 2 days. So why are we here today? Well, let's learn a great strategy that doesn't have to win a lot. I want it to, obviously. I want it to win as much as possible. But when I literally say, look, I'm going to take an upside trade and potentially a downside trade, let the market be the market, and go after a net winner, that's a pretty good way to trade. You can literally make up-down decisions. Market has to go somewhere up or down, and we can cast a net that gives us, a slight win every single day. And when our winners are, 150, 175, 200, 190, it's a lot of return on risk. So you're stacking the reward to risk in your favor, and your win percentage is still, 58 to 60% is going to make us a lot of money. Okay. So we'll have a masterclass on this week. I want to teach you the mechanics on why we take these trades, what the strategy is like, and how we can jump into the next trade opportunity. So welcome to Daily Doubles. It's an option strategy. This this by now. Hopefully, trading with me is options. I think are one of the greatest tools that's been created. 1973, the option markets comes into existence. Market makers, we do it every single day with daily profit play. Option strategies that you have to own 0 stocks and you can generate ridiculous amounts of income, and also just take some really good leverage trades. So low risk, high reward. That's what I focus on here for my double ups. Okay, I'm in the markets with you every single day. Top stories here: Ken and Kathy, Randy. Lots of happy students out there. I'm doing something I thought I'd never do. I'm pulling back the curtain on some of my software I've used now for about 5+ years, and showing us how right now the biggest influence in the markets would be futures market flows and option pricing. That is literally what's driving price. I know you can say, well, fundamentals driving price and earnings driving price. True to a point. But the price action is driven and fueled by the futures market and option flows. Okay. And then from there, you've got market makers layered in to kind of establish the guardrails and where things can go to the tops and bottoms. But what I'm looking for is, do I have an underlying move? Like here's one in Apple, chart showing about a 220 underline, and we have a nice sticky level that we're likely going to see price get to 223 over the next couple of days. And our job is to place a trade, allowing us to double our investments, hopefully within a couple of days. Okay. And I call these liquidity levels. This is on my option platform, my dynamic trend platform, which gives me these big sticky liquidity levels and camel levels. Okay. Now you won't spot these on a traditional stock chart. This isn't technical analysis. This isn't a 10K Form 4 fundamental reports. Okay. This is in the options market. These liquidity levels, you can spot these things in real time, and it gives us a shot to cash in big each and every day. Last week, literally like Thursday to Friday, we had this earnings. We took an earnings trade on Tesla last week and made a winner on Newsbreakers. But that run from, I'm not sure what day it was. It was either like a Tuesday or Wednesday, but the day of, like, we had I think Tesla's low last week was like 419, and it ripped all the way back up to like 448. You can see that clear as day on my software. Here's an example on Meta, 20% in a month, which is a huge run, and then it started to show signs of weakness and starting to get back some gains. Of course, the news chirps and says no upside left. It's running out of momentum, likely overvalued, blah blah blah, noise. Okay, it didn't really matter because I'm focused on what's going to happen in the next couple of days. So Meta's trading at 572. We've got a nice fat liquidity level at 580. This is my magnet for price. Okay, I'm looking for Meta to hit 580 within the next couple of days. So reasons that'll become clear. I'll talk about that magnet for price at the 580 level, but we're going from 472 up to 580. And what happens? Well, we essentially create our trade, give ourselves a window that lets us kind of front run the directional move. And what happens? Sure enough, price did exactly that within the same day. So this is a 572 to 580 move in the same day. Now, if this was a Thursday to Friday, or a Friday day, that'd be perfect. If this is a Tuesday, Wednesday, I mean, this is a Friday expiration, we can still pull money on it. It's not going to be max profit, but we can still pull some profit on that trade. That's all we need. 114% gain. Triple digit winner on Meta. Okay, another liquidity pops up on Microsoft. Underlying trading around 420, big liquidity level around 430. Likely Microsoft would hit that by the end of the week. So trading around 420, big magnet level at 430, and we're looking to place a trade to get that run. So it's kind of a front run, happens in a couple of days, and Microsoft goes from 420 to 430. 109% gain. Okay. Now, Meta, Microsoft happen to be, lucky they happen in the same time, but $2,000 invested in each of those trades the same day, 44.60 in profit. Not too bad. Right? We know this. I'm not going to beat this stuff up and talk about it all the time, and you feel it. Rising cost of food, healthcare, and housing. Suggesting we could have an extra $1,000+ in expenses added onto our standard of living now. Again, it sucks. But best way to outpace inflation is to grow with it, and also try to outpace it, obviously. But 117% gain, 109% gain would have been pretty sweet if you're covering the cost, an extra, $4,400. Where if rising costs are an extra $500 to $1,000 and we're making $4,400, we get ahead of it, and we keep doing that over and over again. So the idea is to grow. We have no choice. We have to grow, right? So it's important that we learn the tactic today. I'm trying to find them for you. That's the whole point of my service. And so if you've struggled trading and you've typically taken this is what a lot of traders experience is lots of winners, lots of losers. Typically the losers are bigger than the winners. And a lot of traders like tread water where they're just not making net returns. Okay. Unfortunately, that's a reality for too many traders out there. My job is to hopefully curve that where we're going to start winning more than we lose and start winning bigger than we lose. And then mathematically, we're going to start making some money. Okay. So we can earn and learn. But I get it. A lot of people look at these popular indicators, relative strength, Bollinger Band, stochastics. They've got their time and place in the markets. They've got their use for technicals. Some people argue that technical analysis is subjective. Some people argue that fundamentals matter. I'm kind of a blend trader. It's like I think technicals matter a lot, but I also think you've got to read the room and see what this market's doing on a bigger picture scale and what the overall like kind of sentiment is in the market. But real money day to day is made by following money flow of institutional investors. Okay. The challenge is it's very difficult for most retail traders to do this stuff in real time. So if you're following Nancy Pelosi, if you're reading through 13F filings to see where hedge funds are going, Form 4s and the SEC is like these are all lagging. These are typically published 45 days after a typical trade has already been placed, right? It only shows the long end of the trade, not the short end. So there's typically hedges and hedge funds. But what we need to have is a way to follow Wall Street in real time. And these liquidity levels help us do exactly that. So here's one on Netflix. Netflix trading at 670. Then out of nowhere it goes up to 680. You're like, what the heck? That's a $10 move on Netflix today. What happened? No explanation for the move, no unusual volume, no major headlines. But here's what actually happened on my software. There is a magnet price, order flows, option flows that Netflix is likely going to gravitate towards that 680 strike. Okay. So it's going to hit there by the end of the week. If this trade was on a Tuesday, you can expect by like Thursday, Friday, prices are going to be likely gravitating towards that 680 level. Knowing that ahead of time, we can essentially, front run the move and put in a bull put spread, wins. Put in a bull call spread, wins. Put in a butterfly spread, wins. Right? Buy a call option, win. We get price right. So getting a nice little gain there. 138% gain on Netflix by the end of the week. So $1,000 of that one would have paid $1,380 in just after a couple of hours. Somebody more confident, starting with $2,500, pays $34.50 in pure profit. Now, like I said, there's no magic 8-ball when it comes to investing. Winners and losers will happen. It doesn't matter how good we are. Like I said, my double ups here, one of the lower win percentage strategies, but literally a trade that I can place a winner and a loser and walk away with 50% return on capital, 75% return on capital, even 100%. I can win one and lose one and still win 100+% return on risk. That's a great strategy to me. It just means that my bottom line is bulletproof and we still walk away profitable. Okay. The key is, like I say here, winning more than you lose and winning bigger than when you lose. That's how we can mathematically make money. That's what I'm able to do with these liquidity levels. So this software that I have, this basically lets me see about 40 different option chains for all different sizes of investors out there. I'm mostly focused on the institutional side to see those big levels. So 40 plus option chains builds an aggregate feed. Where's price really going? Do we have massive levels, paying premiums above current prices? What are my big strikes? What are my big magnets? And I see this stuff all in real time. So it's a lot of Wall Street's buy and sell orders on full display. And, we're talking market makers, liquidity providers, hedge funds, big institutional flows, family offices, like deep, deep pockets. So Wall Street's biggest option positions, market makers have some of the biggest liquidity positions in the world, and also gives us the exact strike prices. Okay, that is a liquidity level. So when we take some of the biggest option positions at the exact strike price, and it becomes something I can see on my chart, clear as day, it's liquidity level. So what that looks like to me is that is a price magnet. And typically price will gravitate towards that all week long, or will go up and hit it. We do this every single day in indexes. We do this every single week in options. And this happens with an incredible high degree of accuracy. Here's one on NVIDIA. Okay. Whether you're trading NVIDIA or not, whether you believe it's too high or too low, whatever, that's an opinion. But for one individual trade, it was, dead on water for 2 months. We struggled to go from, higher than 150, came down to 90, back up to 150, came down to 80 or 70 during Liberation Day. And here we are talking at 170, 180 on NVIDIA, right? But didn't matter in the short term, because what do we have here? Here's a 125 underlined with a 130 strike price. That's a big magnet level and a big liquidity level that we're looking at NVIDIA to hit it by the end of the week. So price trading around 125, and just as expected, okay, in a day. It took one day to be ran up through that 130 level. Plenty of opportunity to grab some profits there, 167% gain. Okay. Jumped in that trade, more than double the investment, no time. And, these liquidity levels will pop up out of nowhere. They do happen in real time throughout the week. It means that Wall Street is placing a big bet that price is going to hit there within like the trading week. A lot of these are Friday expirations on stocks, or individual expirations day to day in indexes like SPX or on SPY QQQ. Okay. So you might be wondering why. Like, why is it that these big bets seem to attract price almost like a magnetic force? So let's talk about this. SPY, let's just use an example here, trading at 590. And let's say we have this big fat level on my software at 600. So this could be a combination of institutional investors that are buying call options. This could be a combination of also market makers selling call options, right? But there is something very, very sticky about that 600 strike price. That is a liquidity level. Okay. It's not just open interest, by the way. You might be asking, it's not open interest. If price reaches 600 by the end of the week, institutional investors may be exercising those options, which means market makers would be required by SEC law to have those shares available to fill those exercised orders. Now, depending on how large the option order is, this can mean that market makers are on the hook for hundreds of thousands, sometimes even millions of dollars in shares, right? And so as the price starts getting closer and closer to that liquidity level, what you're going to see is that market makers will basically start to hedge their books in order to have the inventory available to deliver those shares if they need to. And when a market maker is forced to accumulate a boatload of shares in a short amount of time, what does it typically do to the underlying share price? It goes higher. So it's almost like a self-fulfilling prophecy. Okay. So the key is being able to spot these large liquidity levels in real time. They do happen pretty quickly, and they get very sticky for the day or the week that we are trading it. So we are basically front running the forced buying that market makers will put on there to stay delta neutral. And that's what my software is designed to help us do. So everything, this is theoretical, au contraire, because we actually hit a decent winner with the same type of situation on the SPY. Underline at 580, we put in a trade at the 585 strike price. That's what I was going after. That meant if price started to move up towards that liquidity level by Friday, market makers would be buying shares to hedge their order books. Okay. So I put this in Telegram. I took a position that benefited from a run from 580 to 585. And I said, if we hit 580, I'm going to look to get out for profit. And sure enough, as the SPY started ticking higher, market makers were forced to buy more and more shares because that is a directional push. They're no longer, delta neutral if prices are going directional. Delta neutral is easy when it's going sideways, but when price is going directional, market makers have to be hedging. So they ended up buying north of $1.6 billion in SPY shares that particular day. That's a big flow. And this was a gap higher from a Wednesday close to a Thursday open. You can see that big gap above that 585. That actually hit my profit target with extra credit, which I was pretty stoked about. So while most folks are wondering, like, how does this even happen? We end up closing out that Thursday morning open for a triple-digit winner of 247%. So $2,000 invested, that one would have paid $49.40. We've seen bigger winners, we've seen smaller winners, and we've certainly seen a couple of losers, especially if I go both ways. If I'm trading the market up and down, I'm going to take a loss, right? But the goal is that the winner is bigger than the loss. Same story here on Google. Always being probed by the government for antitrust and monopoly. The stock itself was performing like a dumpster fire. It's down 25% in 2 months. Stock that most investors would say doesn't really have any upside. Something's going on with Google, right? It's going to be threatened by AI, blah, blah, blah. Out of nowhere for the short term, it didn't really matter because we have a big liquidity level at 152, trading around 149. So you know the drill. We can take our entry here. Anything that benefits from this bullish direction, bull call spread, bull put spread, right? You can buy a call option, benefit from that directional push, and get it right in timing, and then we can look to see if it hits our profit target, hits our liquidity level, and then take our profit. So enjoy the afternoon array from the screen. Get the alert from me in your pocket. Close out position, entry, exit, all in real time, and and also you can set the take profit ahead of time, so you don't have to sit here and wait and wonder. Triple digit winner, 119% gain. Okay, so you notice as the price of the stock starts to move towards these liquidity levels, the buying activity will intensify. That's because we're tracking short-term weekly liquidity levels, and it's only looking for 0 to 4, 0 to 7 day expirations. I'm not really looking much further than that. So if we started today on a Monday, that would be a 0 day expiration. Friday would be 4 days. 7 days would be the week out. So maximum here would be anywhere between like 0 to 7 days, 0 to 10 days. Okay, but a lot of times the trades are taken like today, tomorrow. I'm usually managing trades with the highest probability profit and the biggest win opportunity in the next like 24 hours. Okay, and this is what is crazy. This number is actually small compared to what we've seen in the last couple of months. 2/3 of all trading volume is now done within 1 week or less, right? We have had 0 day options where the volume has been up to 73% of all option volume is coming from 0 day. So that could be a, SPX 0 day options, SPY options, QQQ options. 70+% of that volume is coming in for a 0 day expiration. So it's incredibly short term now. And even in the bigger stocks, the Mag 7s, all the big liquid stocks out there, a lot of this is happening from like a Thursday to Friday. So like a 1 day window. Very, very short term trading. Okay, so when a large player places a big options order that could get exercised in less than a week, doesn't leave a lot of time for those market makers to have the massive inventory on hand if they need it. So they have to do this. They have to scramble to secure the inventory and have the shares needed before the options expiration deadline. And that is a buying frenzy, right? That typically accelerates price faster and faster until it satisfies that liquidity level and they're properly hedged. And, also that kind of satisfies the directional push and pushes towards those magnet levels and guardrails for the week. So here's an example on Amazon. Underlying trading around 176, sticky level 182. That's my magnet price liquidity level. And what this would mean is that you're likely going to see market makers that would be forced to buy shares of Amazon until it hit 182. But here's where it gets crazy. Watch price accelerate. Watch this price. Watch this chart. Okay. So we're trading around 176 a share with a sticky liquidity level at 182. Right. So it's way up there, but watch this price action. You'll see the rate of buying increases more and more. You'll see a lot more green candles than red. Okay. More green candles than red. And as it gets closer and closer, that last little stretch, way more green than red. Look at the bodies of the green candle compared to red. Like a magnet. It's not an accident. Okay. This stuff happens. This happens every single week. This happens every single day. This is the powerful reality of option trading. For that particular day, Amazon had $348 million of shares in inflows that day to push prices around. So what do we have to do? Well, if we took a buy option, if we bought a call down here, it paid very well. If we did a bull put spread, it paid very well. If we did a bull put spread or bull call spread, paid very well, right? So we have ways to take advantage of that direction. If we wanted to take this direction with a high reward to risk, we could do that too. But point is, we place the trade. Okay. So that was a triple digit winner for the course of that week. We actually took that winner much earlier. It would have been worth a lot more had I waited all the way to the end of the week, but we had triple digit in our fingers. We took the profit. So back-to-back trades here, 106%, 119%, 5K invested in each one. You got $11,000 in just a couple days exposed. And again, You can put whatever dollar amount you want onto it. I just think you got to trade with, risk capital and make sure that's it's responsible. Never trade too big, and certainly never over leverage. I'm no stranger to showing folks how to book some 5-figure profits. Here's Sandy here's Sandy making over $10,000 in 2 weeks. Pretty high praise here. You're the best I've seen in more than 15 years of trading. Lynn had an incredible run, 4K to almost 20K in profit. Do I have a crystal ball when it comes to trading? No, but this is the closest thing I have to a high probability visual roadmap where we will see winners, big winners, small winners, more winners than losers. But yes, we take the occasional loss. So as I said before, never risk more than you can afford to lose. Look, all of my trades are live money. All my alerts, live money. I'm never trading big, ever. Reason why is because I never want a loss to emotionally rattle me. Okay. I can get annoyed. I can be frustrated that I thought it was a good trade. It didn't work out. But losing a trade should never be a reason that you have to question a strategy. There are plenty of good trades out there. Just keep taking them. But when you take huge losses, it just makes it harder to survive. So I'm a big believer in just trading small, sticking to the process, and letting good trades just stack up time and time again. So this is where daily doubles takes up a notch. You also will notice this during a lot of periods, especially with high volume and high liquid options and stocks that are really popular to trade. You'll see that you have extremely pricey options. In fact, this is one thing that was kind of crazy about gold and silver these last 30 days is even though gold and silver were ripping to all-time highs, the put skew was insane. And you saw that puts were actually very expensive. So to protect your gold positions, to protect your silver positions, it actually was very pricey to buy puts. So anyway, there's pricing skew in the options market. Okay. So what I don't want to do is I don't want to pay for really expensive options, which is why I like to trade spreads, or I like to trade, a strategy that allows us to make it more cost effective and also still increase our probability of profit and also have some really big reward to risk opportunities. So an option that would cost, for most folks, like buying a 30-day call option would be expensive, right? Some like $1,000+ sometimes. I looked at that calendar spread this morning. It was over $1,000 to take that trade. So I'm not going to take it. But my software only tracks the short-term levels. I can look out anywhere between 0 day, 4 days, and 10 days. Okay. So I'm tapping into pretty cheap options for the most part. And that offers me a little bit more leverage. It's the same leverage as what it would be if I was trading 30 days, but I do it with far less capital at risk, and I'm timing the market a lot better, so I'm not overpaying for that time premium. Does that make sense? So I choose these weekly options because it's really affordable. It's still very liquid. There's tons of volume with the market, basically 50 to 60% of the market volume being very short term. And we eliminate a lot of the time decay, right? So we're holding these trades for somewhere between maybe same day or maybe one or 2 days. This allows us to supercharge our returns. Okay, here's one on Microsoft. Underline at 420, big sticky liquidity level at 425. Okay, and hit there by the end of the day. So this was a Thursday to Friday, and this is kind of a perfect setup. I love it when this happens. We have this big sticky liquidity level, and we get there in the same expiration I'm choosing. So if I trade it on a Thursday, I'm looking to hit my pin price by Friday. Okay, so if you bought a 30-day call option on Microsoft, it's about $820 to get in. But a weekly option, it's a lot cheaper. You can go in for a day. What's going to cost about $158. So would you rather pay $820 or $158? Look at the difference of returns. I'm going to go through these pretty quickly here, but I just want to see the power of timing and not overpaying for premium. So 102% return on risk versus 23% with way less capital at risk. So you can scale this and take your 4 or 5 contracts and risk the same amount of dollars, but that same amount of risk in dollars pays exponentially more profit with 102% gain. So obviously I prefer the bigger return on risk, and I'm sure you would as well. So the answer is pretty obvious. We have better timing, good amount of leverage. We can supercharge our returns. Here's one on Tesla. 225 underlying magnet liquidity level at 235. Normal options 30 days out, $935. Weekly option 275. What happened in the next 24 hours? We hit a profit target, triple digit winner. 122% return on risk or 39% return on risk. No brainer. So weekly options are explosive. Apple, crazy expensive on this one. 30 days out, $1,300. Weekly option 107. Almost a triple digit winner there on Apple. 96% return, way better than a 19% gain. with way less capital at risk. Okay, NASDAQ over $1,000 for a call option versus a weekly out 166 doesn't set you back an arm and a leg. 153% return on risk versus 22%. Okay, here's Russell, 755 for a monthly, 190 for a weekly. I pay attention to this, 156 versus 36. Okay, if you put in $2,500 to each trade I just talked about here, Apple, Russell, NASDAQ, Tesla, almost $16,000 in profit with way less capital on 5 trades. Okay, so these trades are, 0 to 1 days, 0 to 4 days. That's pretty much the window that I'm focused on because I want to time it. I want to eliminate a lot of the expensive trades that we have to take with options, and I'm going after precision. Okay, all right. So that's why, this is part of my exclusive trading service. We're going to do a masterclass on this week. This will be on Thursday for my double up alerts. You'll hear me talk about this more this week, but double up alerts. Let's talk about the core strategies. And it's the only place that I know that we're essentially looking to front run some of the biggest Wall Street orders in real time. And I'm looking for the power of, and I do mean this, we're talking about strategies that could pay us upwards of 500% return on risk, 1000% return on risk. We have that type of profile here. So I like those trades where it gives us this massive profit opportunity, and we don't need to try to make 1000%. It's great if we did. But what I like is if we are offered 1000%, it's actually quite easy to generate 150%, 200%, and not have to sit and wait all day and all week to get that trade to pay us. Okay, so it's a really good high reward, low risk strategy. That is what I focus on almost exclusively for double up alert. So here's how it's going to work. I'm looking at the biggest, most liquid stocks out there: SPY, QQQ, SPX, and Mag 7. That's pretty much what I focus on exclusively. And if I like the trade, I'll package up, throw it in the alerts, and it takes a few buttons. Click on it with the alert service comes out with daily doubles. Here's one on QQQ, underlying trading at 480, sticky magnet price at 486. Send it out through SMS, one-click trading member portal alerts. Get it in our Telegram. Okay, take a directional trade. So we're going buy call, bull put, bull call spread, whatever it takes to get that price to go from 479 to 486 and generate our return on risk. Okay. And what did price do? It did behave. It did obey. It went to that magnet level like I expected it to, and we generated profit, 119% gain. Not bad. Okay. And on average, I'm looking to sprinkle these trades in a couple times a week. You never have to guess how we're doing. We have this trade tracker. The model portfolio is up almost $69,000. There's over, I'm trying to think here. We have over 111 trades in the service. We have 118 trades in the service, actually. Win rate 58%, average winner about 100% return on risk. Average loser was 78%. Okay, with winners, like I mentioned, I'll read some of these off: 520%, 220%, 150%, 190%. A lot of triple digit winners that I like. Okay, so if you know me, you're joining me live every single day in Daily Profit Play. You know that I do enjoy teaching traders every bit of the strategy. There's a reason I trade the way that I trade. There's a reason I have a variety of services, because I want there to be something. It's something for me that covers the market up, down, sideways, and it's something for you to get the job done with whatever your preferences are. You want to trade every single day. You want to trade every single week. You want to trade every single month, right? Short term, medium term, long term. Are you active? Are you passive? Are you, what's your risk tolerance? It's whatever you're at as a trader. I'm trying to offer a variety of services where I can do that. And like I said, every trade that I take is live capital, live money. I don't want to lose, right? My goal is to, if I take 2 trades, win the trade. I could lose one, win one. If I walk away net profitable, I'm happy. If I take 1 trade, well, obviously there's my conviction on that 1 trade. I want to win that trade. So I want to win, period. I've been doing this for a long time. I don't trade to lose. I don't trade just to appease you. It's like I trade to make money. So if you're new to trading options, I want you to level up your skills. We do have an option trading boot camp inside your classroom. If you upgrade to lifetime of my double up service, I will give you a free $500 course called Practical Options. It's my full course. The best parts about these liquidity levels is we can pinpoint the exact strike price for setting the profit target, which allows us to set the trade up and set a take profit at the same time. So you truly don't have to, take the trade and wait for my alert to exit. You can just set the trade and put the exit in, and a lot of the times those profit targets get hit. Okay, so that is our predetermined payout plan. I'll teach that in the masterclass this week on Thursday. That way we hit our profit targets and it automatically close this out. All right, so we'll cover this in the masterclass this week on Thursday. I'll be running that from 2 p.m. to probably 3 p.m., maybe 2 p.m. to 3:30. But I'll walk you through our core strategy step by step. We'll obviously try to find some trades this week together, and each and every week if I can. We do have a lot of earnings this week, so this is a pretty perfect week for it. Mag 7 has earnings. Apple, Amazon, Meta, Microsoft, Google all have earnings this week. FOMC on Wednesday. Market's going to have plenty of reasons to move, so that makes things pretty exciting. Okay, we also have double ups to the downside. Obviously right now the markets have been melting upward at all-time high again today, but we will see in the near term, we will see price actions that will allow us to take some trades that are high reward, low risk to the downside. Okay, so same process as usual. If we have the underlying price at this example on the SPY trading at 598, and I see this big magnet price at 594. So what am I doing? Well, I can do a put option, right? I can just buy a put option. I can do a bear call spread. I can do a bear put spread, and I can also pin that 594 level. Any of those strategies can work. This is what I'll explain in the masterclass on why I choose the strategies that I choose and how we follow price action. And so within 24 hours, SPY dropped from 598 all the way down to 594. This actually happened in the same trading day, but we opened and went up towards like 600 and then fell all the way down to 594. So that was a nice triple digit winner, same day, 118% in less than 24 hours. And that trade, by the way, offered up over 200%, had it held on to it a little bit longer. But once I hit my profit target early, took my triple digit winner, and I was happy. So $2,500 invested turned into $5,450 balance. Upside, downside alerts included, double up alerts a la carte on my website, chrispulvertrading.com, is $32.95 per year. So if you see the website, read on double up alerts, you're going to see it priced at $32.95. Okay, now I've convinced the team to do something for this service along with others. Is I'm trying to make all my services very competitively priced, where it's not an overstretch. It's realistic. There's lots of time with me. There's lots of education, lots of master classes, and great trades, obviously. So what we're going to do here is we're going to do a double discount, $1,000 voucher, and we're going to do this for each one of these trades has the power to double in 1 to 2 days. So if it means you put in $1,000, you get $1,000 in profit. That's a 1-to-1, right? I'm looking for something where if I put in $1,000, can I get $1,500 profit? Can I get $2,000 profit? Right? So we'll take that $1,000 off the membership fee, but we'll do it twice. Okay, so we're going to double up that $1,000 bonus, and from $32.95, let's take off the $2,000 here. So we're going to double up those vouchers and get you down to $12.95. That is complete access for 1 year of my double up alerts. Big reward, low risk. That is what I focus on. I'm talking trades that we can risk less than a couple $100 for gains of like $500 to $1,000+ a day. That's the setup. So that's what I would go into like meticulous detail on Thursday for the masterclass. And that's why it's one of my favorite strategies, because at its core, we never have to worry about risking a lot of money, right? Let's focus on managing our winners. Let's focus in on, if you lose, you could probably learn to lose responsibly, probably better with double ups than anything else, because the losses are insignificant. And the winners, I expect to win. I'm looking for a win, but the winners are so much bigger. It's pretty fun. It's pretty fun to flip what a lot of traders experience, which is I take all these wins and then I take one big loss that sets me back, 5 trades or 10 trades or more. This is not that service. This is a service that if we take one loss, we have one win, all of a sudden we make up for 3, 4, 5 losses. So obviously with a decent win percentage and bigger wins, mathematically moves the needle pretty nicely. Okay. All right. So with the double discount voucher, we're down to $12.95 for full access of my double up alerts masterclass this week on Thursday at 2 p.m. Eastern time. And I look forward to seeing you in class. I think it's a great strategy to learn. I've got core strategy 1 and 2. We'll talk about the short-term liquidity levels, how the market makers kind of influence pricing throughout the week, how we look at Mag 7 and SPY, QQQ, and SPX each and every week. That's what I'm focused on. And I look forward to seeing all the new members in class on Thursday. So links coming in the chat here in just a moment, pressbirdpub.com/double up. If you want to talk to our team and get slotted for the masterclass on Thursday, give us a call, 904-706-3537. Okay, links in the chat. Give us a call. What's the next alert going to look like? Well, you'll see it in your Telegram. You'll see an email. You'll see it in your one-click trading member alert section. Yeah, and there's obviously it's live trading, so I can't promise future gains, but I can go back and see that over 118 trades, we have made a lot of money in the service. And a lot of that money that we've made is because our winners are so much bigger than our losers. So yes, we have a win rate that is 58%. I'm not stoked about that. I want like a 70, 75% win rate. But I also know that literally when I take a trade that I go up or down, I win and I lose. If I did that every single time, I'm literally talking about a 50% win rate. Okay. But my winners are so much bigger that it doesn't matter. So if I risk 100% on each trade, I win one at 200%, I lose one at 100%, I'm still making 100% on total risk for those two trades. So think about the mechanics of that. I'm carving out an edge of 58%. So I'm winning more than I'm losing. Even if I'm taking multiple trades, I'm net profitable on these trades. Do the math. There's a reason the model portfolio is up a lot of money, right? There's a reason our winners are in the triple digits that are way beyond our losers. So that's why it works. So 106% gain on NVIDIA, 125% gain on SPY, 218% gain on SPY. This is an early trade. We took CleanSpark, 214%, SPY, 247. This was the one SPX last week, 520%, 190%, 158%, 221%. Just reading off some numbers. There's going to be losers. There will be losers in this service, okay? But they will be small, and they should be insignificant compared to what we expect, which is let's win. Let's have big, fat winners, and it's fun. It's fun to win. You know, it's fun to win way more than what you're risking because most people don't experience that. Most people experience the opposite, which is you risk a lot of money to make a little money. Because the reality of the market is this. In a typical risk-adjusted return, if you put all of your money in the S&P 500 and you're 100% invested, you're going to average about 8% a year to the upside and risk anywhere between 15 and 25% to the downside. That's the reality of the market, okay? So that's not fun for anybody to have, 8% gain to the upside, and it's not every day is, it's 8% every single year. It's like it's going to be up 20, and then it's going to be down 15, then it's going to be up 30, it's going to be down 40, and it averages out to about 8%. But it's lots of sentiment swings. So I'm talking about trades where our losses are small. If I'm risking less than 1%, but my wins are 1.5 to 2 to 3%, that gets us ahead a lot faster. So we can bulletproof that bottom line and build those accounts pretty nicely. Okay. So $2,000 into the alerts I just talked about here, paid over $18,000 in profit. That's more than enough to pay with the service here. 12 months of the service pays for many times over. So $12.95 instant access, great masterclass coming this week on Thursday at 2 p.m. Eastern time. Every time I've done this class, I can tell from the feedback, it's like light bulb moment, aha moment. That makes a lot of sense. I love the strategy, super low risk, high reward. Traders love it. I love it too. It's a really, to me, it's an enjoyable class to service because the losses are tiny, insignificant, and the winners are monsters. I love it. Okay. So let's sweeten the deal. If you call our team 904-706-3537, we have additional best deal discount as well. You'll see that if you talk to our team member. Best deal expires soon. I'll talk about this for a couple more days as we go into the masterclass on Thursday. It's first come, first serve, $12.95 for double ups. Okay, if you want to upgrade to lifetime, I will throw in a $500 bonus course called Practical Options Full Course. This is 13 of my favorite option strategies. You don't need to know all the stuff, but it's there as bonus education if you want it. I'm going to be doing a free kind of teaser session on Friday for my practical options anyway. But that's just the tip of the iceberg because I want to get you through like the foundations and the prerequisites that, I've got a lot of traders that come in and follow me every single week. And my goal is let's make sure we have the right knowledge moving ahead when, obviously options is a lot to unpack up front. They're what seems to be like a very intimidating learning curve for many, many traders. I don't want it to be that way. I want it to feel like we can go into something that's digestible, something that's bite-sized. We can get in, kind of hit the ground running, and we can earn and learn. Options are fantastic tools to trade. I mean, it's changed my entire career as far as like profit management, account management, looking after the capital that I do. Options has helped me make way better risk-adjusted returns than ever before in my career. So it's been a solid, 10 years of doing that. All right. Now, you can upgrade to lifetime for pennies on the dollar. You'll see that in time, that second, third year, it's essentially pennies on the dollar. If you go to upgrade for lifetime, never pay for the service again. That means no renewal fees, no maintenance fees. And also you can pass this on to a friend, a family member, or a fellow retail trader to help them out. Okay. Retail traders should never be competing against each other. It's us versus the market, right? Our job is to make money. I think this is one reason we've seen since 2020, 2021, the retail crowd has gotten a lot more sophisticated, a lot smarter, and it's out there. Like information is out there. There's a lot of ways to take advantage of it, but it all comes back to how well are we managing our trades? How well do we manage our risk? How well do we manage rewards? And that stuff will never go away. It doesn't matter what the market's doing, up, down, sideways. Like, we have to manage our risk and reward. So I believe the discounted lifetime will probably be expiring by the end of the week. But anyway, you've got $12.95 for Index Access. That's 12 months with the service. If you want to upgrade to lifetime, it's pennies on the dollar. I'm giving you a $500 bonus course as a big thank you to upgrading to lifetime. And we'll have a masterclass this week on Thursday. It is all about being an explosive strategy. Tiny losses, huge wins, and really good blanket strategies that we talk about through class. Okay. Top stories here. Here's Nicholas, set up on Walmart, made 110%. Rich, 2661 in trade recommendations. Here's Nathan, already paid for the service, made thousands of profit. Here's David. Here's somebody that paid for the service in the first week. Here's Kathy. Here's Phil. Here's Ken. Okay. Here's Sandy again, we mentioned. Here's Troy. Again, lots of traders, lots of testimonials. I need the team to like upgrade those or update them. There's a lot more happy traders in the same 10, 15, 20 they keep showing. Okay. So double up alerts. Let's get after it. $12.95 class on Thursday, 2 p.m. Eastern time, masterclass for double ups. Like I said, the class is filled with light bulb moments and aha moments. It is an eye opener. It might make you think twice about how you've been trading and focus on something that is exclusively on small risk, high reward. And also having, really good game plan every single day. This isn't long-term either. I take these trades oftentimes like same day or within a week. So it is pretty short term in that sense. It's like it's action. You get some action for the week, which is good, but it's high probability. Okay. All right. So this is the only place I know that we're looking to essentially front run some of the biggest pushes on Wall Street, some of the biggest magnet prices we see every single week. And the setup that we're looking at is the power to double our investments within a couple of days, hopefully same day. Okay. So here's one on Netflix, $588 million bet on Netflix that particular day. And it hit that gamma level. Knowing that ahead of time, take the trade, find that that strategy. This is what I talk about on Thursday, and price goes your way. And then, take the trade, set the take profit, spend the rest of the day, the week away from the screen, doing whatever you want. And, I'll still send the alert out. We'll get the trade closed out automatically for take profit. That's a predetermined payout plan. But the nice part is we automatically close it out for a triple digit winner, 138% gain on Netflix. Okay. Not bad. Put more money into it, you make more profit. Obviously, that can happen if you're comfortable with the risk. So there you go. FAQs, how much money is needed? This is what I talked about. On average, these trades are very cost effective. Okay. Some of the days that I'll take this strategy with double ups, I will put a trade that costs me less than maybe $200 of max risk for potentially up to $1,000 to $2,000 in profit. So do I get $1,000 to $2,000 in profit? No. But last week, for example, if you were with me, I put a trade out for double ups. I lost $70 on one trade, and I made $390 on the other trade. That's just one example. So percentage-wise, I lost 70. That's a 100% risk. Okay, but my gain of 390 was like a 500% winner. Awesome. I want lots of those. Okay, so if you obviously scale that, where if you take a 1 contract position versus a 5 contract versus that capital is up to you. But the point is, on percentage basis, if I lose 100%, but I gain 500%, I'm making money. Okay. So these trades aren't expensive. They'll be somewhere between maybe, $50 to $100, $50 to $200. So it's a perfect scalable strategy for big and small accounts. Can you trade this in an IRA? Yes, you can take this in cash accounts. You can take, as long as you have permissions to trade options and option spreads in your IRAs, you'll be fine. Everyone should be requiring or demanding level 2, level 3 option permissions anyway, because it's actually doing you a disservice if the broker's like, congratulations, Mr. Smith, you can buy call options now. Well, Mr. Smith is not realizing it yet, but he's set up for failure if that's all he does. So we want to be able to help you get the highest option permission possible. And that way you can fully, take advantage of your account trading up, down, sideways with the power of options. So can you trade this in IRA accounts? Yes. I manage a handful of IRA accounts. I trade every single trade that I want, 1, 2, 3, 4 legs, debits, credits, you name it, I trade it. Okay. Entries and exits. Yes. Typically what I'll do here is I'll set an entry alert. In that same entry alert, I will put in the exit target that I'm looking for, and then I will still issue an exit trade. Okay. So that way you can set the trade up, set the take profit, And if I'm going to manage the winning side a little bit better, maybe I can exceed that take profit. But you can also set it up, set the take profit, and go after that double or hopefully more. Okay, so we're never left hanging or guessing. We know exactly what we're doing from start to finish. We do have a 14-day money back guarantee that gives us, 2 weeks of trading with me live. I'll find some good trades, this week, next week. We've got lots of volatility ahead with Mag 7 in the Fed and PCE and end of the month. Lots of reasons for the market to be moving. So, get to trade with me this week and next week. Also get a masterclass in this week on Thursday. So plenty of reasons to see. This is why we have aha moments and light bulbs. This is why it makes a lot of sense to trade. This is why traders love the service so much. Also, our team is standing by every single day, 10 a.m. to 1 p.m. to answer questions. Types of trades, like I said, very simple stuff. It could be a bull call spread, bull put spread, right? Just I want to take I don't want to pay expensive options. I want a asymmetric reward to risk. I want to risk less, make more. And also one of my favorite ones, which I've talked about here in Daily Profit Plan, which is butterfly spreads, iron butterflies, broken wings. I don't really use broken wings on this, but anyway, all that is just fancy phrases for huge return, small risk. Okay, so we look at this like I'm casting a net. I'm looking to do like a profit trap every single time I take one of these trades, and those profit traps usually offer like 5 to 1, 9 to 1, 10 to 1, 15 to 1, and they work. They work really, really well. Okay, all right. Next trade. Well, jump in the class and let's, if you have access to the class and double ups, you'll get my alerts. If I post an alert, take a live trade, you'll see it inside of Telegram and also inside your member portal classroom. And then also on Thursday, we'll break down, all the strategies that we do for this full service and hopefully find a couple of good trades together. Thursday is a perfect time to do that masterclass as well, because we'll also be spot checking in real time everything for Friday's expirations. So all of our options this week, Apple and Amazon, Meta and Microsoft, even Tesla, even NVIDIA, they don't even have earnings this week, but they will have some sticky liquidity levels we can look at and then look at the SPY, look at the Qs. So Thursday is a perfect day for double ups. Cool. All right. That is my final slide for the day. Price action for today's daily profit play, totally sideways for the last 90 minutes. If you did a standard daily profit, worked out well. I didn't get filled. My dollar credit, I guess I'm asking for too much. The market wasn't capable of filling me yet. So I will just kind of wait and see.
All right, guys, that is the presentation for the day. I'm going to keep the room open for a little bit in case anybody has a question, but I hope you guys have a great rest of your day.